Hey there, welcome back to the channel. So today I want to share with you my 5 tips that help to put me on the path to profitability as a trader in the stock market. Let's go. Hey everybody, welcome back to the channel. My name is Jimmy. Happy New Year, happy 2020 to you. In today's video, I want to talk about trading profitability because just last year, 2019, I became profitable as a trader. Now, when I started off in the beginning of 2019, I was day trading only. And as I worked my way through the year, I hit July. I discovered options trading. I discovered some great free resources for learning. I started off on a new path, and by the end of the year, I have discovered profitability in the markets. I was recounting what helped me become profitable. I jotted down about 5 things and I decided, hey, let's make a video for you guys. If it helps somebody, then it's a worthwhile venture. So here we go. Tip number 1, you gotta know what you're bad at. That's right, I said it. You can try all you want, but if you're bad at something, you've gotta recognize it yourself so you can cut it off and move on to the next thing. For me, I'm a terrible day trader. I tried and I tried and I tried, but I just found myself going back and forth with wins and losses and ultimately being about 50-50 and even down a little bit. So once I realized that, I said to myself, hey, Jimmy, we gotta move on. We're wasting our time. We're not really making any money here, and you're actually losing a little bit. So let's find something else. So from there, I explored into swing trading because since high school, I've been long-term investing, and I thought I want something a little more engaged, a little more active than long-term investing. I don't wanna just buy stock and watch it grow over 20 years. I wanna be in and out of the markets, following different sectors, sort of being aware of what's hot and what's not. I like growth stocks, so I wanna get into some more high risk plays. I wanted to do different things and be active in the markets, but as a long-term investor, I couldn't really do that. So I started swing trading a little bit. That was short-lived because I would start to get nervous because I thought, oh, I need to be in, I need to be out. I was sort of swing trading, I guess, as a day trader. It just wasn't working out. So I went ahead and said I'm bad at that, so I stopped that as well. Then July came along, I discovered options trading, I fell in love with it, I started down that path, I realized I was doing well with it, and I said, hey, you're good at something, Jimmy, you're gonna be fine. Don't day trade, don't swing trade, just options trade. Stick with it, see where it goes. So that's tip number 1. Tip number 2, you gotta be open to different styles of trading. That was very crucial for me. I would have never found options trading if I wasn't being inquisitive and looking for different things and being open to different markets and different styles of trading. There are equities markets. You can go large cap, small cap, mid cap. You can go into the futures markets. You can trade precious metals. You can get into soybeans. You can trade oats. You can trade options. You can trade crypto. There's so many different styles of trading. You got to be open to exploring other areas of trading. And that's ultimately what was the unlock for me. I discovered options and my brain just said, yes, this is for us. Let's do this. Let's do this. Options. So that's tip number 2. You got to be open to trying different things. And in my example, I was hard-headed in the beginning about day trading, but then once I finally came around, it was options, and I've been on my path since then. So be open to different styles of trading and different arenas of trading. Tip number 3, and this might be the most crucial, is keep your size small. When I started out, this is actually one tip that I didn't know I was gonna follow, and I followed it without really having it be a thing. I was good at keeping my size small because I recognized I didn't know anything in the beginning. So you've got to keep your size small, and I mean share size, so that you don't get too big in any one position and blow up your whole account, especially if you're trading with a small account. A couple trades and you could be done, and then you'll never know, could I have made it? I don't know. I blew up my account. So keep things very small, and when I say small, I mean, you hear all the time people saying only risk 1% of your entire account on any one trade. So if you have a $1,000 account, that's just $10 on any one trade. So you got to keep things very, very small. To be risking $1,000 per trade, you got to have a 100K account. And not a lot of people have that size of account when starting. So keep it small. And one little add-on to step number 3 or tip number 3 is 3A, we'll call it. After you start to become profitable, continue to stay small because you might just be overconfident and had a little bit of luck. Beginner's luck is a real thing. Sometimes people jump in, they have some success, they think, oh, I've got it, I'm perfect, and then they ramp their size up, and then they blow their account. So when you start to see some success, ease up, stay small, leave it run for a while, and if you continue to show profits month after month after month, then you're on to something and it won't just be beginner's luck. But stay small, that's key. Step number 4, blueprint. You need to have a blueprint of what you're doing. So if you start to notice some success, start taking notes on what you're doing. This was critical for me. I decided I was going to approach options trading under a certain set of conditions. Which stocks do I want to trade options on? I went ahead and I laid that out, and now I follow that. And this tip is going to come with an example. We're going to jump into the charts. I'm going to talk about how I pick a stock out for options trading. This isn't for you to mimic. This is just to show you what I do. If I say I'm trading options and I need to find a position, what criteria deliver the right stock to me? Because I can't just pick any stock. I got to have one specific stock with certain criteria so I can check those boxes and then know it's time to put on a trade. I think I just spit in the air. So let's jump over to the stock charts and I'm going to show you what I like to do. All right, here's where I like to start. I like to look at finviz.com. This is a very simple way to do this. When you discover the criteria you want, it's good to use a scanner to kind of pick things out. For me, I like to look for stocks that have been trending in the upward direction and have had either a 5% pullback over the last 2 weeks or sometimes a 10% pullback in the last month. That puts something on my radar. And what I've done is I set up a screener here in FinViz, and if I click on it, I can go to this options over $15. So I like to trade typically large caps, but sometimes I'll put the mid-cap plus so I don't miss anything. So mid-cap stocks and higher that have been down 10% last month, they're over $15, and they're US companies. That's kind of my preference for beginning my initial search for an options trade. So you can see in here, it brings up one page of results. Here they all are, and I can just go through them and hover them. I like looking for that uptrend. So you can see on this thumbnail, that's not an uptrend. I flip here, nope, nope, not an uptrend, still looking. And I just go through it just like this, and I try to find a stock that's uptrending, sort of like that one kind of was. But a good example would be Okta. So this is a stock that hit that scanner just about a week or 10 days ago. So you can see this stock right here, and I'll move myself out of the way, but you can see right now, this meets my criteria. It had a down move after being in an uptrend pattern. It was down 10% over the past month. I went ahead and took a peek at it. It was mid-cap and up. It was $15 and larger in price, and it's a US company, so I felt good about looking at it. So that met a majority of my criteria specifically. Then once I have this figured out, the next thing I want to find out is, what is its implied volatility rank? And you can watch some of the other videos about options trading. I'll put one up right here. And so what I like to look for is the implied volatility rank. And what I like to do with that is I like to flip over to my Tastyworks platform because they have a nice display of IV rank, which is implied volatility of a stock measured against itself historically over the past year. So if I flip over there, you'll see this is Okta. And it's the same stock we were just looking at on the TD Ameritrade platform here with that nice pullback. But you can see up here, IV rank. Now, it's 8.3 right now. For options trades, you want to have larger volatility to start off, sell premium, and let the volatility contract. So I put this trade on about 2 weeks ago, maybe a week and a half ago, and you can see volatility has shrunk. So this volatility was above 30%. And 30% IV rank and higher is where I like to be in terms of putting on an options trade. All my stuff met in the scanner here for FinViz. I find them all, I look at them. If I see an uptrend that meet these conditions, then I flip over here, I look at Tastyworks, I find out what the IV rank is. If it's 30% or higher, then I'm interested. I dive into the trade tab and I start looking for the right premium that I want to sell for my option strategies. If you're curious about my option strategies, I can throw a video up right here. This is the put spread. Check that out. It's kind of an interesting one to look at. And if you're curious about some other plays, you can also check this one out and look at the covered call. Both great options trading strategies, especially for people who are newer to trading options. And finally, step number 5, tip number 5, make sure you record all your wins, all your losses, and details about all of your trades so that you can continue to push yourself in the right area and direction in terms of success. For me, I just use a Google Doc and I have a spreadsheet set up. I record the tickers, I record my profits, my losses, and I tell you what, I'm gonna show you my spreadsheet and my records of this past year and how I go through and color code things and which column titles I use. I've had some people ask about this in the past, so why not? Today I'm gonna show it to you. I'm gonna show you what I do with my columns, my names, what I record, and then kind of how that shapes my trades moving forward in the future. So let's take a look at that spreadsheet. Okay, here's my trading log. This is where I go in, I enter my trades, and I track everything that I do, and I'm gonna show this to you guys right now. So you can see early in the year, I started, it was July 8th of 2019 when I started this log, and I chose to put the trade to count the number of trades I've taken. I have my ticker, so I know all the tickers I've traded. I put in the premium that I received for that options trade, and if you don't know about premium, you can check out the videos I just linked up. They'll kind of get into that a little bit more. I record my strikes, the price of the strike. I have the stock price overall. I have share size, which is also equivalent to contract size. 100 shares means one contract. And then I put in the premium total, how much I collected on each trade. I put the options expiration date in here. I put in the call away profit for when I'm trading covered calls. Covered calls are interesting because as a stock goes up, if you expire over your strike or get called away, you have profit that comes from that. And then I also record which account I put this trade in. I have 3 accounts with TD Ameritrade and 1 account with Tastyworks, which is my small account challenge. And from there, I have everything laid out. And then you can see right here, IVR, IV rank I like to record. So I also will put that in some of my options trades. And that started later in the year, recording the IVR, so you're not seeing it right here right away. But you can see in here, for the stock price, if I didn't just buy the stock and I traded a contract on it, you can see that I put in whether it's a put or whether I'm rolling the position, which just means changing the contract, moving it to collect another credit. I'll get into that in later videos, but this is all of my stuff that I'm doing in terms of recording all the tickers I'm trading, which week it is, the dates of that week, which account it goes in, what the expiration dates are. I log everything right in here, and that keeps me on track so that I know what my weekly profit is if I hit that goal. And then if I did, that kind of helps me figure out how I'm going to approach my next week. Because say I have a really slow week, and the next week there's a little more pressure to try to make up non-profits from the week before. So it just keeps me aware of how much money I'm making each week and how I need to approach trading moving forward. So this is how I track my trades. Google Docs, title it. You can put as many tabs as you want in here, and you can just keep collecting year after year. So you can see right here, I started my 2020 options trading chart. And you can see today, I went ahead and rolled 1 position in the small account, in the Tastyworks account. I collected $18, so I'll be buying my Lamborghini tonight. And recorded the IVR, 36.5%. And then also recorded the deltas, and we'll get into that in a later video as well. But this is my way of tracking my trades. So are there any tips that aren't in this video that you use? I'd love to hear them. Drop them in the comments. Hope this video was helpful. I hope it helps you get past those sticking points to becoming profitable. If you have questions, drop them below. Thank you for tuning in. And if you want to join our free Facebook group, hit the link on the YouTube banner, and we'll see you next time.